scheduled increase in the loan limits is a blessing for borrowers, but it still creates debate about how much the government's role should be in the housing market. Because guess what? The federal government is about to back mortgages up to $1 million for the first time. The maximum size of home mortgage loans eligible to be backed by Fannie Mae and Freddie Mac is likely to jump in 2022. And this is a reflection of the rapid appreciation of home prices all across the US. The increase may make it easier and cheaper for borrowers to buy a home, particularly in those expensive areas of the country. But the higher limits are also likely to elevate that debate about how high government mortgage-backed loans should really be. This is Kiwi the Coast, your luxury real estate specialist, helping you maximize and sell the value of your coastal home. Now, new to the channel? Hit the subscribe button. Let's dive in. So what are the current loan limits for a mortgage? By law, the loan limits are updated annually using a formula that factors in the average home price increase nationwide. Currently, government-controlled mortgage companies can back mortgages as high as $548,250. That's in most parts of the country, but of course in California, they could go as high as $822,375. Those limits are expected to jump to a new baseline level of $650,000 in most jurisdictions and to just under $1 million in high-cost markets. So where are these high-cost areas? Well, it happens that 100 counties out of 3,000 have been designated by the Federal Housing Finance Agency as high-cost marketplaces. So when will these new loan limits take effect? It'll be January of 2022. Now, mortgages within the limits are called conforming loans, and mortgages that are higher than these limits are called jumbo loans, which tend to be more expensive for borrowers to obtain, and of course the requirement for larger down payments as compared to other borrowers. Mortgage bankers and real estate agents are happy because they say this will keep pace with the double-digit increases in the real estate market pricing. Low mortgage interest rates and buyers looking for more space during the pandemic has helped fuel the pricing surge in recent months, as well as the shortage of new homes. Nationwide, the median single-family existing home price rose 16% to an average of $363,000. And that's from a year before and a record from data going back to 1968. So should the government interfere with the housing market? Some housing experts say that the recent jump in home loan limits raises questions about the appropriate role of government in housing and whether taxpayers should effectively backstop a sky-high real estate market when Fannie and Freddie's market share has already been rising. Now, Fannie and Freddie, which guarantee about half of the $11 trillion mortgage market, don't actually make loans. They instead buy them from lenders and package them into securities to sell to investors. The company's market share during the pandemic jumped to nearly 60% of all new mortgages, and this is up 42% from 2019. Hey, I hope you found all that information valuable. Don't forget to subscribe to my channel so that you can stay up to date on all the changes affecting you and the real estate market. We'll see you on the next video. Varum.